Today we're breaking down Occidental Petroleum's third quarter earnings call, and let me tell you, this might be the most transformational moment in the company's history. They just announced selling their chemicals business for $8 billion, and what they're planning to do with that money could completely change the game. Stick around because number one on our countdown is absolutely massive. Let's dive in. Coming in at number 10, we have major developments in waterflood projects. Occidental has approved two significant waterflood initiatives in the Gulf of America that are expected to improve recovery by nearly 150 million barrels of oil equivalent. Here's what's really exciting. These projects could reduce the decline rate from 20% today all the way down to just 7% by 2035. The King Field project starts production in the second quarter of next year, while Horn Mountain begins injection in mid-2027 with expected returns between 40 and 50%. At number 9, STRATOS is making serious progress. This is Occidental's flagship direct air capture facility, and the startup is proceeding well. They've already commissioned the central processing unit and started up the process compression facilities. The team expects to be circulating chemicals this quarter and injecting carbon dioxide in the first quarter of 2026. What's impressive is how the complex machinery started up successfully on the first try, which is rare for projects of this scale. Number 8 brings us to the capital plan for next year. Occidental is targeting spending between $6.3 and $6.7 billion in 2026, which represents a significant reduction from this year. This plan would deliver production that's flat to up 2%, with the flexibility to adjust quickly if oil prices deteriorate. The key here is that a much larger proportion of spending is now in short-cycle U.S. onshore projects, giving them maximum flexibility to respond to market conditions. At number 7, Occidental is demonstrating absolute cost leadership in the Permian Basin. Their well costs have dropped 38% since 2023, which is staggering. Even more impressive, their new wells are outperforming industry averages by 10 to 18% depending on the area. In the Midland Basin specifically, their wells show 22% higher 6-month cumulative production, while the industry average actually declined 5% over the same period. Number 6 is perhaps the most technically exciting development: enhanced oil recovery in unconventional shale. Occidental has decades of experience with carbon dioxide flooding in conventional reservoirs, and they're now applying this technology to shale wells. Their demonstrations have achieved 45% production uplift, but they believe commercial projects can reach 100% uplift, essentially doubling recovery. This represents a 2 billion barrel resource opportunity, with 3 projects moving to commercial development and 30 more ready in the pipeline. Coming in at number 5 is a massive resource expansion. Occidental just added 2.5 billion barrels of oil equivalent to their Permian resource base, bringing the total to 11.5 billion barrels. This now represents 70% of their entire 16.5 billion barrel resource portfolio. This growth came organically through better subsurface characterization and advanced recovery technologies, not acquisitions. At number 4, we have outstanding third quarter operational performance. Despite oil prices being more than $10 per barrel lower than last year, Occidental generated $1.5 billion in free cash flow. They achieved their lowest quarterly lease operating expense per barrel since 2021 and exceeded production guidance across all domestic assets with record Permian production of 800,000 barrels per day. Number 3 is the balance sheet transformation. From the $8 billion in OxyChem sale proceeds, $6.5 billion will go toward debt reduction, bringing total debt below their $15 billion target. This will save more than $350 million annually in interest expense and create a much more manageable debt maturity schedule with a focus on retiring the $4 billion maturing in the next 3 years. At number 2, shareholder returns are coming back in a big way. With the debt target achieved, Occidental will begin opportunistic share buybacks based on market conditions and intrinsic value. They plan to maintain $3 to $4 billion in cash and will resume redeeming Berkshire Hathaway's preferred shares in August 2029 when the redemption premium drops significantly. And the number 1 takeaway, the OxyChem sale marks the completion of Occidental's strategic transformation into a pure-play domestic oil and gas company. This wasn't just about selling an asset. It was the final piece of a multi-year strategy to build a focused, low-risk portfolio with 83% domestic production, industry-leading margins, and a 30-plus year development runway. With the proceeds strengthening their balance sheet and funding both returns and growth, Occidental is positioned to deliver differentiated value for years to come. That's your breakdown, and if you found this valuable, don't forget to like and subscribe for more earnings analysis.